Today we will be talking about the loss trap. That is the exact place that every single unprofitable trader lives. That place is where the permabear dwells, alright? They live there. Even the permabulls as well. Because we always talk about the permabears, but we have the permabulls as well. If you don't know why is that, there are people who are permanently taking short positions regardless of the market situations and permanently taking as well long positions. And that is the reason why a lot of you are stuck in that loss area, in that loss world where you always lose regardless. The first thing I want to say is that most of the traders, they love long positions. They love long positions. I love long positions as well. But there is a problem in there because when you are too in love with long positions, it's always a good time to buy for you. And in reality, in trading, it is not always a good time to buy, all right? When you look at this chart, all right, and you look at this, would you say that this is a great time to sell or to buy? You might say it's a great time to buy because the market went down, failed again, and now it's rising, so it's a good time to buy. But the problem is you can't randomly decide that it's a good time to buy because of patterns. And I talk about this. People say that I'm a hater of patterns. I'm not a hater of patterns, but patterns are not realistic, but they do work sometimes because it's 50-50. It might work, it might not work. We have a beautiful example right here as I speak. You can see that there is something forming here. This famous draw, I believe everybody watching this video knows this. Famous draw that a lot of traders, actually profitable traders as well, will end up doing. All right? And there we go. When we break above this line here, we faked out down here, then we pushed back in. And when we finally opened and closed here above it, the market went higher. All right? And people genuinely believe in this, and it works sometimes. It's a 50-50 work and 50-50 not work. So this can work. This can be done. But the problem of this is that a lot of people, when they are trading, they will look for these patterns and say, oh, it's a perfect time to buy because I see this pattern. But the market has nothing to do with this pattern, all right? What happens here is simple, right? The market goes up. There's a lot of liquidity accumulated at the top. The market fails, goes down. The sellers cannot take all the liquidity down because they have less money, right? Meaning that, let's say, let me give you a real life example. You want to climb this mountain and they tell you that to climb this mountain, you need to pay around 50K, all right? I'm gonna start drawing here. You need to pay 50K to take all this mountain. But the problem is you only have 25K. So if you only have 25K, we will let you go to this point. And the rest of the 25K, you can't pay them to complete that 50K we told you, all right? So if you can complete that 50K we're asking you for, now we have the other people who are the sellers that step in and they tell them, for you to go back to where the market was, we need another 50K. And they say, we don't have 50K, actually. We only have, let's say, 15K. And then for 15K, you can only go from here to here. And that's it. And what happens here is clear. The buyers, they had enough money to push the market to this point, but because of the accumulated liquidity that was at the top here, they failed to keep pushing it higher to complete the 50K because there is this 50K at the top and they already spent 25. And then by spending another 15, the buyers will also come back in the market with more money, buying it for lower price, all right? Because buying it here and here is different. So if they buy this for a lower price, all right? Let's say they buy this for that 15K that they spent here. They buy for 15K and they have 25K, right? If they spend all this 25K here for a better price than it was up here, you see that they will push even higher to this point. And this is what is happening in the market. It's how the market moves because of the liquidity. The market didn't make this structure because it's for you to then draw lines and then the market will respect those lines. No, the market never respects no line. The market don't know what is happening actually. When I am buying and you are buying at home, we don't know that the result of that will be these patterns. But what we know is that we are spending money, we are putting liquidity in the market, and we are also taking liquidity from the market. All right, so now I'm going to show to you visually what I just said. All right, it was around here. Go back to this point where we started to rise. We can already see the accumulated liquidity I told you is here. And you can see that here we don't have as much. The market goes up to that level and we start failing because what? We don't have enough money. And then the sellers step in, they drop. And when they get to this level, and you remember that I told you that here we have small liquidity here that is called unseen liquidity. Is a present liquidity in the chart, but not as important as this liquidity you see here, because liquidity is actually everywhere. But the important liquidity is the one we actually need to see. But when you see the market failing here on unseen liquidity, how much more will it fail when it gets to this important liquidity? So clearly it failed to go lower because anyways we had a lot of liquidity at the top. And then the buyers stepped in with more money they got now, and they pushed the market higher, right? We finally break above that 50K price we were talking about. So this video, I made it exactly to explain to you that the reason why you are stuck in that cycle of losses is because it's always a good time to buy for you. Even if you go back around here, even if you see that here the market will struggle, and you see a big candle coming in like this will boost your mind to believe that maybe we will break above it. You see the market dropping here, you're not taking profit, you still believe in it, right? You see the market going below the field area, and sorry, you don't have this yet, but you will soon have this. You see the market breaking below the field area, and you still believe in it, right? And sometimes you might be lucky like this and go even higher, all right? It's beautiful. But now let's go back to this example right here. It's a perfect example. Accumulated liquidity at the top. The market is rising. And then you see the first signal of failure was this. If we have unimportant liquidity, unseen liquidity here, and we are failing like this, you need to understand that we went all the way up here and we failed again. This is a big sign of there is rejection above there. And then the market gave you a second chance to get up here, the same place we failed, and you still believe that we will break above it. When you see that new red candles are coming, new liquidity is in the market already, you still believe in it. And this is why we call permabulls as well. You still believe that the market will go high. But the market shows you that no, I failed there for a reason. I don't have enough money. Let's go grab more money and then we'll come back with more money. Right? Beautiful. Now that you understand how permabulls are, now we're going to talk about permabears. You see that we have new liquidity here. The market goes down and then we fail 2 times, right? We came down here, new liquidity stepped in. If this new liquidity is fake liquidity just to make us think that we are about to go up, we want to see the market going back, taking this liquidity and breaking lower. But then, let me slow it down. But then you start seeing that the candles that are opening below those liquidities are failing. There we go. That candle failed to open and close here. And it opened in the field area. Sorry, it opened above this liquidity. If you want to catch the bottoms and the tops, guys, which is very dangerous, but if you want to do it anyways, you need to pay attention to this. Look how we came down below the new liquidity. We failed, right? We didn't break below it with one candle, meaning that this candle came down here, failed. And then the second one pushed down, failed again. And the third one pushed all the way back to above these two liquidities, meaning that in theory, we never went below this level at all because the price is now here. All right. And is that why the liquidity doesn't disappear, right? Because some people have a hard time understanding that. The liquidity never disappeared because this is a fake out. I believe you heard about fake outs. So the liquidity shows you that this was a fake out. They never took me. They don't have enough money to take me. So when you see failure taking new liquidity, you understand that new liquidity that comes in is strong enough to stop the buyers to keep going higher. And it's always the same thing. When the market's about to shift, we see failure from new liquidity. You can see here, big drop. If I show you here what happened before, and we're not even going to talk about the accumulated liquidity that was already showing us there. There we go, new liquidity from the red side. This new liquidity, if we see the market failing to this new liquidity and we have old liquidity, it's even worse for the buyers. It shows us how weak they are. There we go, new liquidity is coming in. The buyer failed miserably to go above that level. So this shows us a lot of the times that it's the end of that market up, that uptrend, right? So basically speaking, is permabears don't care about what the market is doing. Don't give a flip of what the market is doing. If the market is failing to break above new liquidity, they don't care. They will still believe in their direction. If it's a short position, if it's a long position, those are permas. Those people will forever be losers in the market because for them, the market needs to do what they want the market to do. It's painful for me a lot of the times when I have a very positive bull run or a very positive long position, and then the market shows me that actually not. You need to swallow your ego, okay, and give up on that long position and take short positions. It's hard for a lot of traders, and that is the reason why they lose. So I'm doing this video because I don't want you to behave like that. Don't force the market to move as you want, all right? Move as the market moves.